So this time around, I'm just trading this particular zone. So I marked up this zone from here to here of this candle, and so my point of emphasis on this quick video is this candle right here. So let me make the drive from there, the flipping. So from this one, it says it's going up, and I made a Q on the candle before it. Then it says it's going up. So it came out of that zone. That's a losing trade. That's -1. So because it came out of that zone now, I'm like, okay, now let's sell. And I picked it up from here all the way to anything inside of the candle, inside of the zone back is fine. So I'm taking it from there. Fortunately, it came, but it didn't give too much. And went back into the zone again. Still no problem. It's trading, it's trading. Hope it gets profitable. So there we have it. So now it came down. It came down from this point. It came down from this point, and because of that point, it actually gave less than 165. Did it even give 150? Let me see if it gave 150. I'm going to change that to 150 actually. So where is this one? I'm changing this to 150 to see if it gave me 150, because I've been using 150 on my other, videos and other strategies. Sweet. So as you can see here, it gave me a successful 150. So it gave me 150. So while I'm saving this, good, saved. So it gave me 150. Then now that I gave me 150, at that point I would have broken even on the remaining part of the trade. So now it came back. Remove this so that we can see more visibility. So now after giving us 150 here, then it went right back and got into this point. When it gets into this point again, that's again for us another buy. So now let's check what the buy is again. Sweet. Oh my lord, I saw it already. It's just another 150, which is so interesting right now, folks. So another move again based on this one to this part gave us again another 150. Exactly 150 again. When it gave us 150 now, after it has given us 150, then it continued again. So we're open. Okay, it's gonna keep going up, but the rule stays right. So while it was going up, this was our stop loss. This here was a stop loss. However, if it ever comes out of that zone, it becomes a sell again, which is why I was talking about this particular candle. So because of that, now trying to go back down, I'm going to use this one. The candle before it, the candle that gave birth to it, is the one I use. Sweet. So that gave us a 300. After 300, I have some of my stop loss here at 250 maybe. Took that out, and that one there, took it out, and end of it. Then it came back right there to 150. Then it continued again and entered into this place. Upon entering into this place at this point, then the base point again becomes the start of the move, of course. The candle before getting there, which is this one in this case, negligible. So I'm just using this exact candle trying to go up, and it came back right there again, and it came back here again and became a sell again because it's out of it, and it came here once again, and so this, after being done with this candle, And now I'm talking about this kind because it came out, so now we should be selling again. It came up here again and made another sell signal, trying to go down again. It should be the stop loss, but it came again and came back in. Coming in again, it became this one. It's a very tricky trade. Then we're trying to take it up. Then it came outside of it finally now. And when it came here finally, it came out eventually. Then it came there and gave a 400, I think, a 450 as well. It gave a full 400 actually. So the 400 kind of pays for all the ones we've lost on the previous ones, but so that's that about this flipping. Like I said, it's a very turbulent flipping setup. I can make a conservative way of doing it and we can compare it together. So now let's go the conservative way right now. The conservative way would be to say okay, this here is going up. We're like, okay, if it's going up, then it went as high as this. Then it was coming down. It came to this point and became a sell. Okay, you get what I mean, right? It came to this point and became a sell. So now that it's trying to sell, instead of using this one as the base point of it, we'll now use the highest that this guy has actually gone to, which is this level. So we are using this one to this one now, which will now be put it there so we can see together. So because that's the highest it has gone to, and in this case, at this point. So as I can see it, so this becomes a standing order. Nothing is changing this one until something breaks this. I don't know if you get a point, right? Nothing is changing it until this line gets broken. So it's all sell. And I think that can work better. It's not only worked better, it worked for good. The returning point of this guy was at 200. I think this is a better way of trading the flip. So you just use the extremes created by the move. So let me explain it again. He said it's going up, then I took it from there, trying to go take it up, Then while we were trying to take it back up, it came down, broke it. It now created a sell order. Now instead of me using my base point for the sell order as this point, I decided to use it as the highest level of the roof. I think it actually makes sense as well to still use the maximum point of the roof. I think in this case it works as either way, but I think it would have been better to use the maximum move created by it. I think it works, yeah. I think I'm just gonna use that one, to be honest. Yeah. So it came down, nothing is breaking it until this guy is broken. So as you can see, it went back, we tested it, gave us a pullback, even went to 50, give another mad pullback. So I think this is exactly what I'm going to be doing it. So this strategy is going to be called flipping of zone. Which one is better? I'll see you on the next video.